Thank you all for being here. Thank you. So Mark has established a benchmark that I need to maintain at least. So challenging. So this paper is about sustainability stock indices and whether what are the consequences of inclusion in a sustainability stock index, and whether you can manage or in a way package the information you disclose about your CSR performance to maximize your probability of inclusion in those sustainability stock indices. So this is a research partnered with Schneider Electric. So two preliminary remarks about sustainability stock indices and CSR performance in general. The first remark is that cannot be easily observable for an outsider. It's hard to disentangle between firms among an industry, who are the top performers. If you look at the top 5 to 10% performers in terms of CSR, it's hard to disentangle and to rank those firms in terms of CSR performance because it's multidimensional. It's hard to do so. So what outsiders do is that they rely on shortcuts. So they rely on stock indices, for instance. They rely on CSR raters to assess CSR performance because they cannot directly observe it. So these are the two main remarks about CSR performance. So given that, what would be the financial implication and the determinants of a strong signal in terms of CSR performance, i.e. being included in a leading sustainability stock index, such as the Dow Jones Sustainability Index, which is the stock index we use in this paper. So what are the consequences? So the first thing is, do investors care about such inclusions decisions? Does it allow to increase the visibility and to attract more financial analysts, for instance? So to increase the dissemination of information about the firm. And does it facilitate the retention of long-term investors? And investor makers, for instance, following the launch of ETF, exchange-traded funds, that now track sustainability performance. So for instance, BlackRock has launched in 2011 an ETF, so a passive investment strategy that replicates the Dow Jones Sustainability Index. That's part of the project. The other part of the project is, can you make sure that your CSR performance, you're all investing in CSR performance, can you make sure that it's visible enough so that you are selected to be included in those top CSR performance? What are the disclosure strategies that you can use for that? So what we do in this project, we do a matching. So we try to pair firms that have been included in the Dow Jones Sustainability Index, the most selective group of CSR performers, with firms that could have been easily included in that index based on their CSR performance. So this pairing allows to make sure that what we capture is plausibly a causal effect of the inclusion in the sustainability index, and also that we are capturing factors that led to a decision to include a firm in the sustainability index based on disclosure characteristics and not underlying CSR performance. So that's kind of the strategy. So I'm going to present a set of findings that we've established so far. So those are preliminary, so they are subject to kind of slight changes. But what we find is that firms that are added to the Dow Jones Sustainability Index world exhibit a larger stock returns around the date of inclusion. So I'm going to move quite fast on the rest of the results. They also exhibit a greater increase in financial analyst following, so they attract more analysts compared to firms that have been matched in the approach, and they're also more likely to have more long-term investors. Sorry, I'm a bit late. Second findings about the second part of the question, and basically there are some strategies to maximize the probability of being included in the index. First, the information needs to be available and it also to be credible, so you can ensure your CSR reports, use a Big Four, a reputed assurance provider, and the content of the information also need to be sufficient to ensure that the CSR raters are able to kind of assess the extent of CSR performance. Thank you all, sorry.